Welcome to Momentum Monday. Today is February 6th, 2022. We have a special guest, Brian Lund.
Every time we have Brian on, the market bottoms, so he's 1 for 1. And
yes.
I don't even know if that's true.
100%.
We have no data. This is a poorly run operation, Momentum Monday. We've been doing this 5 years. I don't think we still have a graphic.
There have been no studies on my correlation to a market bottom, right? Is that what you're saying?
You're looking good, Brian.
Oh, thanks. Green paint.
Green paint. Just introduce yourself. One loop, Brian. Introduce yourself quickly, and we'll get right to the Momentum Monday.
Yeah. So I've been a trader for 35 years, and I publish a newsletter called the Lund Loop, where I talk about the state of the market and everything from a trading standpoint.
And then Ivan, tell people what you do and where you're from. You're from Cleveland, I think, right? With that accent.
Yeah, I'm from St. Louis. I'm rooting for the Rams next weekend.
You're probably rooting for the Rams, aren't you?
Of course I am. Yeah.
I'm rooting for. This Cincinnati quarter. That's a great team, Cincinnati. It's really fun to see Cincinnati make it to this quarterback played great. It would have been great if Buffalo had made it also, but say la vie. All right, Ivan, take it away.
All right. When are you retiring, Howard?
Did I give the impression I wasn't retired?
You say, aren't you already retired?
I'm really upset that you think I'm not retired at this point. I am going to Pebble Beach, so it's a couple of vacation days.
I saw you tweet about that, rubbing salt and.
I don't think I'll miss anything in the markets unless there's a war. All right, go take it, Ivan, and we'll let Brian.
You missed a lot of volatility last week. The Qs rallied to their 200-day, to their 20-day, and then there were decline there. We had a few big earnings fiascos. Facebook kind of imploded down. What was it? 20-30% on that gap here.
25, something like that.
Yeah, something insane. They're back to their 20 monthly.
Mm-hmm.
Interesting level. Here, Amazon, interestingly, was down 8% on Thursday. Was it Thursday? Mm-hmm. Yeah, right before their earnings. And then everyone was super bearish coming into that report. And they surprised. It's a good thing that the market reacted in a positive way.
We'll see if that holds. The numbers didn't look great, and if they buy Peloton tomorrow, I'll bet but a lot of beginners are leaning. They were licking their chops, having fun with Snapchat, and just in their face.
It's a tiny company, $7.5 billion. So even if they pay 25%, 30% premium, it's nothing for them.
It's surprising to me how many people are still short these things into the hole here. What are you going to make?
Company. So Google announced, what did they announce? 20-1 split. Interesting if Amazon will ever do that.
Yeah.
Apple has done it a few times. It's been Tesla as well, and definitely it's been a positive.
So Ivan, give me what are you seeing out there? What are you seeing?
So what I'm seeing is it seems like the era of negative and zero interest rates is coming to an end very quickly. Big spike in interest rates on Friday all across the world, Europe, the US. You can see that breakdown here in the treasuries, which are like the inverse of the interest rates. Mm-hmm. And we can definitely see that impacting the stock market. Financials close above their 50-day moving average for the first time in a while. So they're kind of trying to join energy and commodities, which have been the undisputed leaders so far this year. Mm-hmm. Early in the week, we saw quite a few breakouts in energy. I don't know how sustainable they are. We saw that kind of reversal.
Yeah, these are there's some price momentum, but these are not like momentum companies, but they sure have been great.
There's price momentum, but they also have good earnings, all of those commodities.
And huge leverage.
Yeah, and so as I say, anything related to commodities is been doing well. It's here the fertilizer company.
That looks really good. The fertilizer stock. Give me a weekly on that, Ivan. On that.
So they're looking constructively on multiple time
frames.
That
is super constructive.
CF is looking a little bit better. It's the real leader. All-time highs.
Yeah.
So most commodity stocks are looking good. Even Alcoa near all-time highs. So this is where actually the momentum has been commodities, oil, fertilizers, and now banks are trying to join. And if interest rates continue to go up, they'll probably succeed. So
yeah, it's so funny. Like the Republicans ran on infrastructure, and the infrastructure shit's moving after the Republicans went out, and the Republicans were trying to take down big tech, and it's it's happening on the Dems watch. That I mean, these things take time to set up. And but Brian, what are you seeing from Cali? What are you seeing in the markets? And Ivan will whip through some charts for you, whatever you need.
Well, it's weird to say this with the indexes not that far off their all-time highs, but I mean, we're in a morning after market right now. We're in like a hangover period of the market. And, that's typical of that type of market. There's just a lot of pain and a lot of frustration out there. And I think it's specifically because of the way a lot of these new investors first got into the market. They got into the market in 2021 in a very distorted market. Obviously, prices were distorted. That's a hallmark of a frothy market. But there were so many macro distortions too. We had, we're in the middle of a pandemic. We've got economic distortions where the Fed's giving away money for free. And you even have like governmental distortions where we have like the craziest president ever. And then we have an administration after that just prints up trillions of dollars and gives it away. So like all these people came into the markets, not only when the markets were at these weird extremes, but also society, everything was at this weird extreme. And so now we're kind of in the hangover period, and it's tough for a lot of people, for individual investors, I think.
Yeah, especially because they haven't learned anything about rotation or stages of the cycle. They only knew growth, and like their companies on their iPhone. I mean, what was that? The dollar just broke out and then reversed quickly?
Yeah, definitely. Big reversal last week, which is interesting because even the European Central Bank said, I mean, they seem to be a step behind the Fed and a little bit more dovish than the Fed is. But yeah, the dollar definitely reversed last week. So the other thing that I wanted to mention is that with the spike of interest rates, interestingly, we're not seeing another drop in all those risky assets like biotech and software, all those names that have been basically halved, and some of them are down 70, 80%. They're kind of trying to stabilize. It's probably a dead cat bounce, and many of those companies are probably not going anywhere anytime soon. As they say, if they don't scare you out, they can wear you out, those stocks in a downtrend. But to me, that was interesting that on Friday with the spike in interest rate, they didn't sell off. That's bullish. Mm-hmm. And the other bullish argument that I'm seeing is that some of the recent IPOs are starting to stabilize and kind of set up. For example, Bros. I mean, it's one of the few, I guess, growth names there is on everyone's radar. To me, that's bullish that the recent IPO is starting to stabilize and set up. And then
we were in this phase where
Robinhood as well. Downtrend, but I think it can test its declining 50-day.
These stocks were just being sold every day. We could call it the ARC thing. I don't know what, Brian, you probably have a thesis, but like my thesis is if it ain't index, they can sell it. And there's no natural buyers. There's just so much supply. There's no real, if you're not indexed, you have no natural buyers anymore. I mean,
we're in an environment where the market is just reevaluating price. I mean, just look at what happened to Netflix and Facebook. I mean, how do you get two of the most widely followed, largest companies in the world that can overnight lose 25% value, right? I mean, that's a big thing. And what I think people don't understand is that a lot of new investors, they look at the price post earnings and they think, oh, that's the aberration, right? That's the distortion. And it may or may not be, but what I think they're not open to thinking about is that maybe the price before earnings was the distortion, right? And we may not be getting back to those prices for a long time. And some of these things like Peloton's never going back to 160. It's probably going to get bought out in the 30s or 40, So it's just the market is doing that readjustment it does every so often, where it's taking down valuations, and that's a tough environment to be in as an investor. You're seeing it, I'm sure, in the private markets too.
No, we haven't, and I'm waiting for that shoe to drop. It's very hard, different for me, because when you put money to work, you have to think about 10 years. So I've been very careful. For the stock market, you can decide and trade earnings and do whatever you want. But I think exactly like you. This will work its way down unless rates peak here and start dropping again. The game goes, and we get another V bottom. So I don't want to be too bearish because we've seen so many Vs and so many interest rate head fakes. But it does feel, and I wrote about this, that we're in, we've been in this ratcheting up of valuations, and we may just be in this. I mean, we've gone from negative, $20 a barrel oil to $90 a barrel. There's repercussions of this that take time. Just like the negative oil created all this kind of fake demand. Now we got supply chain issues. So this shit takes time to work out. For people just chasing oil right now, it's pretty funny. Like these companies have a history of just trapping you. But at the same time, these cycles, if we go into a commodity cycle because of India or Eastern Asia, or Latin America, or even the United States, redeploying people all over the country, people are moving. So you get this, kind of materials and commodity cycle, they can last 10 years. So, and it was 10 years of bad price action, so.
But that's a tough market for most investors because it's hard for them to make the switch from trading or investing in growth. You're not going to go from investing in Netflix to John Deere, right? Or some of these oil.
Well, that's how the market does it right at the top, right? Like if growth was truly going to go into a bear market, which it could, right? Interest rates go into a 5-year rising trend, they don't have to go that much higher, but they can trend for 5 years. This would have been you finally got everybody in. That's how the markets work. They get everybody trapped. Robinhood launches, you know what I mean? And then by the way, all the tech people are moving to crypto. So it's like,
right.
And people don't even know, and it's the perfect crime because no one knows how to trade it. Or the only people who know how to trade it are people that got in early. And so would it be amazing that the tech gets revalued in the NASDAQ, energy and commodities go on a boom, and crypto is the only tech, the new NASDAQ 100 becomes in the crypto world, which is not tied to anything.
Yeah. Well, and that's the big question mark. We've never seen a market cycle like this with a whole new uncorrelated asset class before. But they're starting to see, Ethereum and Bitcoin are starting to get a little bit
They're correlated, but NFTs aren't correlated.
No, of course not. Neither of the altcoins and things like that.
Yeah. So they're not correlated because people they don't look at macro environment. And by the way, this is a global market overnight, meaning like NFTs, kids in Thailand, Korea, Asia, Russia, China can trade these things on OpenSea. And so this isn't like the stock market where it took 7 years to become a thing. Like if you look, FTX will have a Super Bowl commercial, you know what I mean? Binance is massive. Coinbase probably could have a Super Bowl commercial. And, something about Coinbase, pull up, you got Coinbase. Something about Coinbase, at 30 billion, they're like CMGI, but with a cash machine. So in 1999, Brian, you'll remember CMGI, but in 1999, there was a company called CMGI and there was Internet Capital Group. And that was the first, not CME, CMGI, Ivan, you weren't born yet. It's not a public company anymore. But Ivan, they were these holding companies that had no real business and they bought up other internet companies and the stocks and whatnot. So this time around, I look at Coinbase and I go, that is CMGI 2.0, except their core business is massively profitable. So what Coinbase has done has been investing in hundreds of crypto companies. And I know that because I follow all these crypto companies and Coinbase is on their cap table. So this is 1999 times 10 because their core business is spinning off tons of cash. And is a profitable business, unlike CMJ or Internet Capital Group. Plus, they have investments that no one knows how to value, worth tens of billions of dollars possibly, and the market cap on Coinbase is
42.
So I mean, at 80 billion, maybe, but at 42 billion, when there could be 10 to 20 billion assets on their balance sheet, and I don't know how much cash is on, and earning $6 a share, this thing is fucking cheap.
Well, and I think that's a story that a lot of people in crypto are missing. That's the picks and shovels way to get involved in crypto. And I think
when
a lot
crypto
of
sells off, Brian, I've been telling people just buy Coinbase, don't buy Bitcoin because it's not
Yeah.
leveraged Coinbase.
Yeah.
It's leveraged. When prices are rising, I don't think Coinbase is, but after a crash, Coinbase is a much better play because you have cash flow and you have the leverage of prices recovering. Risky, obviously, but that's the way I'm playing it.
And I think that that's what a lot of crypto investors are missing is that they can't separate themselves from the speculative part of it, which are all the crazy coins, and focus on the actual technology, the blockchain and all the things that are going to be built. And that's why Coinbase is a great way to access that. If it works out, obviously.
It's going to work out. Here's the thing that you guys let's look at Apple, for example. Apple's never been more down. Let's pull up Apple. And I love Apple. It's my biggest position. It's Warren Buffett's biggest position. So it's like the new Exxon meets the new Goldman Sachs meets the new. Anyways, I'm now of the opinion, as much as I hate Facebook and advertising, that they're just it's just too evil. And what is crypto? Crypto is built for developers, right? So and you can see Musk hinting at this stuff all the time with Dogecoin, whatever. He will pivot if he can make the hardware for some of these apps, and you go around. You know what I mean? There's a whole new generation that would buy a Tesla phone or a Google phone if it had the right apps. You know what I mean? Yeah. And if it was cool enough. So just when you think Apple can't be beat, and by the way, I don't think Apple can be beat in terms of us speculating on it, but crypto's the only way around all this. Decentralization is the only way around the iPhone, because it is kind of crazy that Apple has this much power over even the next biggest companies. Yeah. And everybody's getting too comfortable that Warren Buffett's, biggest position, you know what I mean? But I mean, Google's still my favorite. If you're pulling up the Google chart, Brian, what are you tracking? Because you're not. I
mean, Google's got multiple $10 billion businesses within the company, right? So they probably have the best model. But like I said, I just worry about the market. Like I said, I worry about this revaluation. I worry that we might be in that compression market that you wrote about. People forget that Microsoft in 2000, Microsoft had 85% of the computer PC market. They had the biggest market share by far. And for the next, God knows how many years, they kept raising their earnings and their profitability, and the stock went nowhere for 17 years, right? So I just wonder, I worry that we may have gotten ahead of ourselves coming out of the pandemic, and it may take quite a while to work off.
Good point. That Microsoft chart, what would you do if that was Apple? The difference is the services business. Jesus Christ. See, there's so many different things about this market because they're just the margins. No packaging, no shipping for these software companies, no like translation costs, like, you know what I mean? And you had to put translations and all the things. And
I mean, things have changed, but my point on that is that Microsoft went up so far, so fast that it just got ahead of itself. And even though it was consistently profitable and kept coining money, it went nowhere. So because the market had to take the valuation down, it was just that part of the cycle. Yeah,
really interesting. Ivan, what looks good? And then Brian, what do you? I'll let Ivan go what he's tracking, and then we'll let you talk about.
Well, I already mentioned what looks good. As you said, it's not just energy, fertilizers. Financials are setting up some recent IPOs, like Bros Brothers, Robinhood. As I said, the positive thing is that the software stocks didn't sell off on Friday with the spike of interest rate. The only thing that I saw that sold off was home builders. Here's a triple leverage ETF for the home construction.
And that was just making new highs. That's
big breakdown on Friday. So definitely the one that is the most sensitive to changes in interest rates. I think
that looks terrible.
There's something for everyone in this market. There's definitely some bullish arguments, but obviously if the lows on Friday are lost right here, I think we can quickly see like a 3 to 5% drop.
And I was going to look at Google because they had the best earnings reaction, and if Google takes out its lows, there's another leg down for tech. Like, so if it takes out 2,500 and And
Google is coding a lot better than the rest, definitely.
but I'm saying, so if Google starts giving up the ghost, we're in a little bit of, you know, there's trouble, because it was pretty
Ivan's right.
amazing.
It's the lows of last week. You know, that first push off of the bottom, you know, that's always a given. It's what happens after the first, you know, pullback. And so we saw that pullback. We kind of put a low in on Thursday. And so the question is, you know, I said in my newsletter, I said, basically Friday's the candle. You know, if we can get above that candle and close above there, we have a chance that we can start moving back up. If we close below, we're probably retesting the lows.
Yeah, I find myself in backpedal mode. I'm trying to take shots on goal because I'm not a short seller, but I am really conservative. I mean, there's just too much damage, and I don't mind paying higher prices in a trending market. And you know, if I'm going to be a momentum investor, for me, it's at this stage of my, you know, life, I'm not going to learn a new sector.
Yeah.
You know, if the cloud's not working, I don't have, and e-commerce ain't working, I don't have many tricks left. But you always got to have an open mind.
Do you own any Coinbase, Howard?
What's that?
Do you own any Coinbase?
I wrote about it. I started buying it in the 160s, 170s, and you know, I'm not like super bullish but it just felt like those are some levels that just, you know, it was a combination of Ivan, like the IPOs were just selling off every day. ARK was selling off every day. It was just becoming a comedy. But like I was saying earlier, there's no natural buyers because they've all moved to the private market. Everybody's got SPACs. Everybody's portfolio is full of shit. That because all these young traders didn't know how to get out of stuff. And I think there's a lot of people just holding a lot of positions that are underwater, and they don't know how to if you look at Peloton, like I remember selling it on the way down in the 60s, finally, you know, giving up. And like you said, Brian, that may never see the 40s again on its own. You know what I mean?
I talked to some traders earlier in the year, and they were trading fuel cell, right? FCEL. And
yeah, I remember like $18, I was laughing.
Yeah. So that it had gone on this run and they were all excited about it. And what I told them is that fuel cell has been around since the 90s. I traded it back in the 90s, and it went on this big run from 1999 to 2000. It 30x'd itself. Then it spent 20 years losing 99% of its value. Right. And I'm not saying that's going to happen to Peloton, but like
no, but it has happened to Peloton.
Well, when the money comes out of these things, there's very rarely a second act of the same scale and magnitude that you see in the first one, or at least it takes a long time for the money to come back in.
No. Peloton had a chance to diversify out of the hardware business when their stock was in the hundreds, and the CEO, just like Crocs, when your currency, this is easy to be corp dev Howard all the time, but
when your stock is your currency, you gotta use it.
These guys were drinking their own Kool-Aid. You know, I mean, to see this, and that's why I say Coinbase has done something that will make them last for decades. Whereas Peloton did something, they started drinking their own Kool-Aid. They make a fucking bike, and you couldn't even watch Netflix or golf on your goddamn Peloton. You know what I mean?
We see that in every cycle. Remember Open Table? Remember when that was a hot stock? And they should have been acquiring other companies and diversifying, using their stock as a currency. They didn't, you know, because like you said, they drink their own Kool-Aid. And you know, we see the same thing over and over again.
Yeah, and the market's punishing anything that doesn't have organic growth. Like Zillow, they just got carried. Even though I was a great founder, he came back to run, and I got trapped in this myself. I wrote it all the way up, and then I, you know, sold a lot on the way up, and then, you know, it's buying a little bit at 100 on the way down, and the organic growth is gone. Zoom may be my next nightmare. The difference is I think the market's so massive, but Microsoft and Google have really come for them. But much different than Peloton because they're not dealing with hardware, and they're dealing with much higher margins, and they're dealing with a much bigger TAM. So I think there's a lot of, whereas Peloton may not come back, like there are some companies like Coinbase and Zoom and DocuSign. There's certain software companies that have a chance to really trick people.
What about telehealth, like Teladoc and things like that? What's your?
They're more of a roll-up, so I never fully trusted the Teladocs. It's like an old company was like caught this tailwind, and they weren't built for COVID. You know what I mean? They weren't like a software first company. They were just something that hedge funds grabbed. And, you know what I mean?
Not a
They've been
pure
around.
play.
And so I think, like, I call it the great round trip. A lot of these companies that didn't have great management. But what you're going to see, Brian, is you're going to see a lot of companies that started during COVID that are built first from a remote situation that'll be the first to come back. Like Robinhood was built in an era where they had an office and they had a team, 2014, 15, 16, 17, 18, you know what I mean?
Yeah, they've got built-in resilience in their model, so that they know.
And now Robinhood at their peak traffic had to go remote, and that's when the problems started to happen, right? And they weren't doing acquisitions, and so if we look back, if Robinhood can't regroup, you can look back at this, and again, I don't have a seat at the table in the boardroom. You look back and go, man, they should have used 15, 16, 17, and they should have diversified. Whereas Coinbase was writing checks for 5 years.
Yeah.
You know what I mean? And so I think and I just don't get the Schwab. Like the Schwab thing, they don't even deserve to be. They just.
Yeah, but they're near highs, right? Schwab is.
Yeah, they're trading at a higher price to sales than Robinhood at this. They're trading at 10 times sales, and what Schwab's trading at 20. Yeah, I mean it's not expensive. It's just not. I just hate the product.
Yeah.
In the end. And all right. So what else? I'm trying to think. Semis, Ivan.
Semis hit and miss. Let's see.
They got hit on this last drop. They're bouncing a little bit, but
so AMD had a really strong quarter again, and they kind of gapped up. So let's see if they hold. Obviously,
So Brian, you're saying the Friday candles are big in tech, and Ivan, you're saying kind of the same thing
for all stocks. Like I think any stock that loses its lows from Friday is probably a short, like at least short term as a swing.
Yeah.
And
because if we get back below that recent low, that's when a lot of mechanics are going to kick in the market, right? That's when you're going to start seeing, like, I think those recent lows are really important. And that's when I think you're going to see like forced liquidations. And when that sort of stuff happens, you don't know where it's going to spread to, I mean, just look at Facebook's loss, right? Just losing all that's got to be on a lot of funds books, that can be problematic.
The thing I think that people have wrong with Facebook, I don't see it because I own a bunch into this correction at post earnings, is they just have so many levers. Even though Apple's got them by the nuts right now, Facebook has just so much size, and Zuckerberg's not going away. So,
but it can take a while. I mean, look at when they drop.
Well, they're not growing that fast, but they're not. They're only trading at like 18 times earnings, right? And they have so many levers to pull, and they're going to have a lot of these companies. The other thing that you could see is, like, if you pull up Snap and Twitter, the brain drain's real. Even on Robinhood, the brain drain's real. And so you lose talent and your stock price. They're kind of hand in hand, and then it gets hard to get them back. And that's where the FANGs have a big advantage, is they can pay cash forever to these engineers, fat cat people. So it's a tricky time. Are
you bullish on Twitter, on the stock here?
I own some. I started buying it over the last 3-4 weeks, starting at like 40, not because just to keep an eye on it, not like it could hurt me. But I just feel like their core audience is never going away. There's so much utility there and new buyers will emerge. New potential buyers will emerge post-Trump. But I mean, I don't think it's going to 100 unless they really brought in a completely new board and a new business model and really could figure out a way to grow. I like Twitter Spaces, the audio stuff, but again, I think it's only good for sports and finance, and they don't even focus on that in their core app. So, it's more like mental punishment for me to just follow it. But at $30 billion, the replacement value of that in 2022 is crazy. I mean, Trump's back is trading at the same valuation, and they haven't even launched a product. So in a world, so that'll bring a ton more attention to Twitter when they finally have their Twitter competitor. So what's the valuation of that? I think like with all the cash, it's like 20 billion. You can't value that market cap is wrong. So you're saying you have an unlaunched company with Trump in charge that's worth the same as Twitter pretty much. And so there's some opportunity here is what I'm saying. It's fun to kind of like speculate on this stuff, especially if you're an options trader. But in terms of the trend market, like if Trump's my trending ticker, I'm not really happy about the market. If energy and Trump are what's trending, I don't think it's the healthiest market to be long on leverage, unless you're in the oil business, obviously. But you've had 10 years of heartache getting your ass beat up. So it's not like they've had it great for the last 10 years. Is that kind of the way you see it too, Brian?
Yeah. I mean, if you look at like XLE, it's breaking out of this big weekly base, but that's not where I want to see the leadership in the market. That doesn't excite me. That's for that sector is for funds that by their charter have to be invested at all times. They put their money in things like that, but it's not for active investors or anybody that wants alpha.
And really the time to buy energy was -30. I remember buying Exxon in the 30s and just flipping it for 10 points and thinking I was a genius. But the real hold was through this leverage. So it's what all-time highs Exxon. So there you go. I remember
I think 2022 is going to be I think 2022 is the year of pot. Pretty sure that's what's going to happen.
I hope.
Okay.
I mean, I don't think there's anything wrong with it. Technically, it's a mess.
I'm being facetious. I mean, that's just been the worst trade for.
I've treated it like venture capital, and I'm looking at, as my venture capital play because I just can't believe they can't get their act together and just help these guys make a living. Like it's just so ridiculous.
Yeah, I talked to a really smart guy, a mutual friend of yours and mine, a few years back, who knows the space pretty well, and he just said that like all the cap tables for those companies were just train wrecks. And not only that, but you have all this management that was running companies when they weren't really regulated and were semi-legal. And it's still some of the same management. I think a lot of them haven't been able to make the transition into the regulated markets, and we keep hearing this narrative for the last year or two.
Well, they can until you get regulated. So it's truly venture capital, which is how I treated it.
Right.
And as a small position in the portfolio. And it truly has been a disaster. It's like on its way to zero. And it's a shame because the government should have gotten out of it. We shouldn't still be at the government part of it is what I'm saying. So you have to get the government fixed before you get the management fixed, right? There has to be that opportunity, which creates boards that get pissed off at their management, which replaces management because you got a business and we're not even there yet, which is a shame.
Yeah.
Because I'm watching TV, Brian and Ivan, and I'm like, everything's gone in odds now. You're watching a sports game and you can't, they haven't legalized crypto, right? And you can bet on every play in a sports thing. And FanDuel's on every ad, and they're telling you how to do 50-time parlay bets, right? So high school kids can do that, or 18-year-olds can do that, but they can't learn about the markets, and they can't learn about crypto, and they can't, you know what I mean? Like this is why crypto is going to work, is because it's the perfect time in a world where sports betting truly is sports gambling, whereas you can really stack odds in your favor with a network of knowledge and beat the institution. That's what decentralization is all about. Really interesting time.
Knowledge networks can be defined.
All right, I'm going to let you guys go. Great to have you, Brian.
Yeah, good to have you, Brian.
Thanks for having me. My Google Home is talking to me, so I don't know what the hell's going on.
Is it talking dirty to you or giving you orders?
I wish someone would.
I have mine programmed to just talk really dirty to me, which means that it only happens once a year.
Do you have it do it in an accent, or does it just speak?
I can't. It's a guy. I can't even figure out how to make it a girl.
It's a guy, right?
I'm having all kinds of identity issues because I can't get it off the guy talking dirty to me.
Yeah.
And it sounds like Ivan, my Google thing. So it's like a Bulgarian guy. Because I wanted a Bulgarian woman, but I got a Bulgarian guy talking to me. All right, Ivan, have a great week,
guys.
Bye. Thanks for having me. Bye.
See you.